Hello and good morning, everyone. Welcome back to Almus Market Mornings, your daily dose of global financial updates with me, Swaraj. The Reserve Bank of Australia opted for a pause yesterday while retaining comments on further tightening, keeping its options open. On the Chinese front, in an effort to curb depreciation of yuan, the Chinese central bank continues to opt for a stronger yuan fixing. But that, in the face of again a weak PMI number, will be interesting to watch. What's interesting is Brazil posting double-digit trade surplus in June, which is a strong performance from the soybean exporter. Morning, JK. How are you reading the markets currently? The RBA cited uncertain economic conditions while choosing to pause rates. Do you think they will retain this stance going forward?
Yeah, that's a big question, Swaraj, because they have been on a very volatile path as far as the monetary policy is concerned, and it's very difficult for market to actually, go by what they are saying right now because their view can change again by the time the next meeting is in. In fact, what we are also seeing is a lack of convergence in the monetary policy among the major central banks. So we have the US and Europe, which are probably the nearest to the peak of the rates among the major central banks. In UK, it is on a super hiking cycle, which has a long way to go yet. And the EM central banks have already passed, and possibly they are closest to the cuts now. And in the commodity-based countries, which are actually dependent on the global growth picture, there is a sense that monetary policy will remain uncertain because inflation is not easing, but the growth picture is actually blurred. In fact, today's CXIN services PMI from China came much lower, at 53.9 versus 57.1 in May. And the market forecast was for 55.6. This actually has reversed short-term strengthening trend in the yuan after the PBOC once again fixed the mid rate below 7.20. So 7.22 continues to offer very good support for the yuan, dollar yuan, and now it's back near 7.25. So we have some sort of a risk off sentiment in Asian markets. Not surprisingly, yesterday overall the markets were quiet, and we had a mixed performance from various markets. Some of the markets in Asia were steadier, but Japanese market, which has had a good run of late, has actually been seeing some profit taking at the highs, and we probably made double top in the recent highs. That can lead to some more profit taking also, but that's not surprising because the market has run up almost 30% from the lows that were seen last year. But European market were hardly moving. US was closed, so even the bond market was very, very subdued. But surprisingly, or rather, to markets dismay, the yields are holding up. The 2-year hold is holding above 4.9293 in the US, and that's giving a sense that whether bond markets are going to see some more turbulence in the coming days, because we are also hearing of more money being accessed from the Fed Reserve by some of the smaller regional banks. So the risk sentiment as we step into the proper market in July seems to be mixed. So we have to really wait for some definite clues. I think we have lots of events coming up at FOMC minutes tonight. We will have to see the details of the members' views, because that we had dot plot indicating 2 more rate hikes this year, and Powell holding on to the same view in his utterances later after the FOMC as well. More importantly, we will also have the services side of the economic activity from various economies, and that's very important because services have been holding up even while manufacturing has been contracting almost everywhere. And then we will have a steady flow of indicators on the employment situation in the US, starting with ADP, jobless claims, and JOLTS data, and finally ending with the non-farm payroll on Friday. I think market will sit on its hands, until these data are out. But definitely today's morning session is somewhat subdued after the Chinese number, which has disappointed. On the rupee, there was some recovery again for the dollar because the good demand from importers continued, and again closing above 82 is giving a sense that we are not breaking the ranges of the last few months, and depending on how the dollar moves, which seems to be on slight strengthening side, we could see the dollar rupee also well supported below 82, and if exporters may while once again decide to wait out because the premiums are not attractive, and they may actually look for some levels like 80 to 30 and above to hit themselves. All in all, a quiet start to the month and the quarter, but I think it's going to get very busy going forward. Thank you.
Thank you, JK. And I recall what you had said a few weeks back. I think that more than the markets, it's the monetary policy which is getting volatile, and that is very evident with what's happening with the Australian central bank. And of course, there is a lack of convergence among the major central banks. UK, like you said, has a long way to go. While the emerging markets have paused, US and Europe are also close to the peak. While Chinese services PMI came lower, reversing the short-term yuan strength, FOMC minutes will be something to watch out for, which will be released tonight, and also the services side data of various economies. Rupee saw some weakness again due to demand from importers. Otherwise, it remains in somewhat of a range. That's it from us today. Thank you so much for listening. Tune in tomorrow for another round of fresh updates.